Let's welcome on board Amnish Aggarwal and chat about where he sees the markets headed. Amnish, hi, good morning. Good to have you on the show. What are you suspecting? Do you think the markets are going to be a little volatile with regards to all the news flow from Operation Sindoor, or do you think it's going to be at best just range bound, given that this is a news that we all knew and anticipated coming?
Yeah, hi Aisha. So I think the initial reaction which you showed of the market 60 points down, I think this is not fully capturing that how the things are set up today. You see, it is not only the question of your operations in Dur, but if you the news which I looked at, that there is a, you can say, heavy artillery firing which is going on across the border. Now it all depends upon to what extent this escalates. If you can say Pakistan also retaliates and there is some escalation, then we could see markets turning much more volatile, at least in the, you can say, coming few days.
Right. Amish, especially given the disconnect that one is seeing right now with what's happening in the broader end of the market and what's happening at an index level. I mean, if I were to just dissect what was happening in the markets yesterday, acute weakness in mid and small caps, the Nifty being held out, but some of the leadership names, you had a Bharti, M&M and a few others hold out. And then banks have been underperforming ever since you had Kotak and SBI deliver their numbers. Tell me, where do you think the sectoral composition in the market is going to head? And let's first talk about large caps.
You see, if you look few months, what had happened was that the large caps actually they saw a lot of FI selling, and whenever we see FI selling, the selling usually is concentrated a bit in the top, say 20, 25, or 30, say 50 stocks. Now, but subsequently, due to the weight, even the mid caps came down. And what has happened in the last, say, month and a half, in a very gist of it, the Indian market was perhaps the most oversold, or it was heavily sold by FIs in the last 6 months. And after the, you can say, Trump tariff uncertainty around the world, and then we saw the markets actually stabilizing and large caps moved. Now, in the current situation, now everyone knows that the interest rates are going to come down. The next year's profitability of banks is not going to be anything great. And there has been a rally of, say, 15 to 20% in many of these bank stocks. So I think it is a typical sectoral rotation and the breather which is coming in at this point of time. So I think in the near term, I think there could be, say, some space for, you can say, defensives. Whether you can say some of these pharma names, hospital names, I think defense stocks could be something to watch out for. So I think defensives could gain some ground in this kind of an environment where there's uncertainty regarding war and all. And banks and I think some of the others, so they can take little bit of, I would say, breather or backseat as of now.
Amnish, I wanted to get your take on some of these wires and cable companies because we have the numbers coming in from Polycab. The numbers look quite strong given the fact that the competition is seen to be intensifying in the whole sector. Just yesterday, the stock was up 2%, but we also have KEI Industries, a strong set indeed. But what's been your reading on both these numbers? And given the competitive intensity inching up, do you believe that maybe it's a time to once again look out for some of those companies which are already in the business for some more time now?
Yeah, you see, wire and cable companies, actually, if you look at, say, Polycab, although there, I think export business had some, you can say, it was under a bit of pressure because some contracts they got rolled over to next quarter. But overall, the numbers have been pretty decent for all these companies, and it has been both on the wire as well as on the cable side. Now, if you look at, say, Polycab, maybe say 3 months back till the news of, you can say, Ultratech entering the segment and even, you can say, Adani Group entering the segment was there. The stock was trading at, say, something like your 40, 45 times, 50 times. And post that, the stock corrected significantly. The valuations today are much more supportive. I think it is trading around, say, 30 odd times on FY27, which today is much more affordable than it used to be. Now, what competition will do, only time will tell. I think it might get reflected, say, a year, 2 year down the line, not on an immediate basis. And that too, it can first come in the wire segment because it is more like a B2C. In case of cable, you need certifications, you need approval, which takes a pretty long period of time. So I think the stocks going to earlier multiples of 45 times, 50 times, I think that is not going to be the case because people have experienced particularly in the paint segment, that when a large player tends to enter the segment, there could be disruption. So those P multiples might not come, but because the P multiples have become more reasonable, there is a probability of making reasonable returns from the current levels. And currently, we are preferring KEI over Polycab.
Okay. I'm just scanning through some defense stocks. Again, guys, these are pre-open rates subject to change, and I think they will change. I have a slightly more optimistic view, Amnish, which is that in last 8-10 days, Indian markets did not align with global markets. While directionally we were up, we were underperforming. And this has happened at a time when banking numbers have been strong, crude has been down, flows have been strong, because everyone in a sense was worried, concerned, jittery, or nervous about the geopolitical attack or geopolitical tensions. If there is no escalation in the next 24 hours and 48 hours in terms of the geopolitical tensions, do you think that could act as a trigger for the market and markets could see a big relief rally of 2-3% or even 5%?
That is, you can say, some sort of a likelihood which can be there, that if there is no reaction at all, okay, or a reaction like, say, what happened in case of, say, Israel and Iran, you can say, a few months back. Okay, if there's a muted reaction or no reaction, then definitely I would say that things will settle and the market can actually, you can say, look at some sort of an upward movement. But my own sense is that to expect that there will not be any reaction to happen, I think at this point of time, I will not expect market or the people, particularly who trade, to build up any position expecting that there won't be any reaction. But if there is no reaction or the things settle in the next couple of days, 2-3 days, then I think that would be a big positive for the markets.
Amnish, I think Bharti is not getting its due, right? It's almost at 2000. We rarely talk about it. Markets are obsessed with banks. We spend a lot of time discussing IT. We do a lot of, prep time in understanding the business model of PB Fintech and Paytm. But Bharti, 2,000 rupiah. Who would have thought that?
Nikunj, I have been saying this one line that telecom is the best consumer stock. You invest in telecom today, you can't. Today, telecom is center of everything. Whether it is a common man, whether it is, you can say, financial, defense, everywhere, you can't work without telecom, and this is going to be the future. So I think telecom companies, you can play only through either it is Bharti or through Reliance. And I think these stocks, particularly on the telecom side, will continue to do well. We will continue to see them giving you can say, good double-digit growth rates even for the next 2-3 years, at least.
Interesting. But, where I got to the telecom space, right, I must admit, Amnish, I thought that they cannot be consumer companies because they keep on investing into technology. 4G, 5G, irrespective of the competition, my view was that, look, this is a business which will always need CapEx. Because you will always need higher data, you will always need more data, you will always need to put those wires, you will always need money to put up those poles. So the capex is something which in a sense according to me was a concern, but yeah, I was conservative and you're right on that. What do you say to capex?
You see, it's a capital intensive industry because the technological upgradation continues to happen over there. There is absolutely no doubt about it. But having said that, the kind of times we are today living in, I think the need or the necessity of connectivity, the way it has changed the lives of a common man, the way it has got penetrated and the impact it can have on the overall spectrum, that is far, far bigger. Yes, you can't match a cash flow of, say, Hindustan Unilever or any other FMCG stock with these telecom companies. But if you look at the longevity of where it goes from here, today, the entry barriers there are extremely high. So, for example, in FMCG, today you are looking at B2C companies, every company going on an Amazon or a Flipkart or anywhere trying to sell the product. Can you get any more telecom companies easily into the system and they can disrupt the business so easily? I think that is not there. So despite, therefore, capex being high, the kind of necessity it has emerged over the past, say, at least 10 years or so, ever since the data usage has increased, I think this is a sector which is going to stay there and thrive.
If you like this video, then like, share and subscribe to ET Now.